All right, we are in very interesting times. Buy the dip, we hear it a lot online. We might hear friends talk about it. What does it mean? But also, what are the two considerations that I believe you need to know when it comes to buying the dip? I'll turn that emergency light off. Hey, my name's Glenn. I run a money podcast and I have an investment book if you're interested in learning how to invest simpler, smarter, and sooner. But let's get into this. So the reason not to buy the dip. So we've seen a big sell-off in international markets, the ASX 200, the S&P 500, global markets through Asia, 10 to 12% drops. And generally what happens is people go, yep, here is a good buying time, so let's get in there. But when shouldn't we buy the dip? I think it's really important to understand that if it was 2 months ago, 3 months ago, 4 months ago, and the indice or your share price was at the same price that it is now at the dip than what it was back 3-4 months ago, and you weren't planning to buy, should you be buying now, or are you getting sucked into FOMO? Do you have your consumer debt cleared and paid off? Because we want to do that before we start investing. Do you have your emergency fund in order? Because we want cash for emergencies before we start investing. Do you have your short-term goals nailed? Maybe you're saving for a house. Maybe you're saving to go overseas. Maybe you're saving for a new car, maybe a family, a new lounge, a boat, a motorbike, whatever that is, your short-term goals, have you considered them? Because if you haven't and you get into this buy the dip thing, you will you'll try and basically make money with money you don't have because the money is for your short-term goals. Make sense? Okay. The case for buying the dip. So in its purest form, we buy low and we sell high. If we can buy the dip, we can lock in some really lower unit prices if we've got ETFs or managed funds or our superannuation or a low share price. And then when the market recovers, we get that huge rebound. And it could be, it could be a 10% return, could be a big dollar amount. Coming out of COVID, we saw a really big V-shaped recovery and it happened pretty fast. And I think it's just important to note when you are looking to buy the dip, are you actually trying to time the market? Come on, because if you are and it works, you will think that you are smart, you're intelligent, but you may have just got lucky. How I do my investing, and this does kind of tie into the case for buying the dip, okay? Don't get me wrong, I love investing. I want everyone to invest, and when there are good buying opportunities, I want you to buy. But in the ordinary course of investing, I'm just investing monthly into my ETFs, into my portfolio, regardless of what the market is doing, okay? So whether it's a low time or a high time, I'm just buying. And throughout the year, you'll see that there's an average price, and we call that dollar cost averaging. Now, if you are doing this regular type investing, as I do, and there is an opportunity, a big pullback in the market, a big fall, a correction, a crash, and you did have extra money on the side, sure, if it wasn't spoken for, if you were just had a bit of an opportunity fund, I personally, the 8th, I think today, I'll just double check. Yeah, it's Tuesday the 8th of April. I put some money into some shares today because they're down like 20% from their highs, and I'm effectively buying what the price was 3-4 years ago. And I still do regular investing. But the thing is, I also have a little bit of cash that I keep aside for opportunities. Now, you could say, oh, Glenn, you're just timing the market. Well, no, because if I was trying to time the market, that you would not see these white dots with my monthly buys. You would only see ad hoc green dots where I think it's the best time to buy and potentially sell and trading. So we don't want to do that, but I'm a big believer if you are regularly investing and you do see an opportunity to put some money into something, whether it is a decline in markets, whether you might get approached. I've got some private equity investments where I see an opportunity come up and I put some money into the investing. So there are some legitimate cases to effectively reverse back the truck, back it up into the market. But the big caution is, okay, and this is where people will crap their pants. You might be going along, all well and good, and bam, I put a heap of money into the market, and then the market keeps falling. This isn't a big deal for me, for example, because I've put money in today and yesterday, and I know when I commit money to the market, it's staying in there for at least 7 years. So I've been investing long enough to know that there will be volatility. But if I do have a decrease after I've put a bit of money in, that's okay. I can ride that out. But if you buy the dip because everyone's telling you to, and the dip keeps dipping, well, you could be what they call a dip. Let's have a look at this. So we've got to be careful that we don't get greedy, we don't get stupid, because stupidity follows greed, and stupidity leads to you being broke. So what are you going to do with your investing? Can you go back and say, yep, Glenn, I think I'm this type of investor. I'm just going to invest monthly, automatic, every quarter, every month, weekly, whatever you want, but it just removes you from the equation. And then if there was a big event happen and you received a bonus from work that you weren't expecting, if you received a tax return back that you weren't expecting, hey, it's all good just to lump it in the market, or you can just increase your monthly proportion and let that come out of your bank account on a monthly basis. When we're investing for the long term, there's actually no right or wrong way to do it, other than to pick a good asset, regularly invest and hold it. And when things get rough, ignore FOMO. When things get rough, don't get greedy, because you will get stupid. What are you doing with your investing? Have you bought the dip? I'd love to know how you do your things. See you soon.